Be honest. How many times have you closed a winning trade too early, only to watch it run for another 100 pips? And how many times have you sat there holding a bleeding loser, whispering, "It'll come back. It has to." As your account slowly drained, you know the rule. Cut losers fast, let winners run. But you do the exact opposite. Why? Because your brain is hardwired to sabotage you. Here's the brutal truth. It's not your strategy that's failing, it's your psychology. Your brain is designed to lock in pleasure fast by selling winners early and to avoid pain at all costs by holding losers way too long. And the market loves this. It feeds on traders who can't escape these emotional traps. The good news? You're not doomed to keep repeating this cycle. Once you understand why your brain does this and how to rewire it, you can break free. In the next few minutes, I'm going to show you the neuroscience behind why you always sell winners early, the painful truth about why you hold losers forever, the 3 psychological rituals pro traders use to reverse this habit and finally let their trades run. If you've ever closed a trade and immediately screamed at your screen, "Why can't I just follow the damn plan?" This one's for you. I still remember the trade that almost broke me. It was a textbook setup, clean breakout, perfect entry, and within 30 minutes, I was up $1,200. But instead of letting it run, I panicked. What if it reverses? What if I lose this profit? So I closed early. 5 minutes later, the price exploded another 200 points. I sat there, sick to my stomach, watching what should have been my best trade of the month turn into a lesson in regret. And here's the kicker. Just 2 days later, I held on to a losing trade for hours, refusing to stop out. It'll bounce back, I told myself. It didn't. By the time I finally closed, I'd lost triple what I'd made on that breakout. Sound familiar? You're not alone. Almost every trader does this. And it's not because we're stupid or undisciplined. It's because our brains are designed to do it. Neuroscience calls it loss aversion, a principle proven by Nobel Prize winning psychologist Daniel Kahneman. Your brain feels losses twice as strongly as it feels gains. That's why you lock in winners early, so you can protect the good feeling and hold losers way too long, since closing them forces you to accept the pain. But here's the good news. Pro traders have figured out how to rewire this instinct. They've built psychological rituals that force them to ride their winners and cut their losers before emotions kick in. In this video, you'll learn the 2 brain biases that cause this destructive habit and why your brain lies to you every time you move a stop loss or close a winner early. The 3 psychological rituals, the top 1% used to break free from this cycle forever, and stick with me until the last ritual because it's the one that finally flipped my win-loss ratio. It's so simple, you'll be mad you didn't start doing it sooner. Quick question before we dive in. What's the biggest move you ever missed because you closed too early? Drop it in the comments. Writing it out will sting, but that sting might just help you change. The pleasure trap. Why you can't let winners run. You know the rule. Let your winners run. But every time you're in profit, that little voice whispers, "Take it now before it's gone." And you listen. You close too early, only to watch the trade skyrocket without you. Then you sit there angry, asking yourself, why can't I just follow the plan? The answer is simple. Your brain is addicted to locking in pleasure fast. Neuroscientists call this prospect theory, discovered by Daniel Kahneman and Amos Tversky. The human brain values a guaranteed small gain more than the potential for a bigger one, even if the bigger one is statistically better. Why? Because your brain is wired for survival, not for maximizing profits. Thousands of years ago, taking a small, certain reward, like eating berries now, was safer than risking it for a bigger one later, like waiting and starving if food disappeared. That ancient wiring still controls you today. Here's how it plays out in trading. The moment your trade turns green, your brain releases dopamine, making you feel good. But the threat of losing that good feeling triggers even more stress. Your brain treats unrealized profits like they already belong to you, so giving them back feels like an actual loss. That's why you hit close too early. Your brain is protecting its dopamine high, not your account. Ritual number 1, the pre-commitment rule. Top traders break this trap by removing the decision entirely. Before entering any trade, They write down their exact take profit and stop loss levels and commit to following them unless the setup objectively changes. Why? Because decisions made after money is on the line are always emotional. One trader I coached started placing a sticky note on his monitor before every trade. It read, TP 1.2450, SL 1.2320. Do not touch. He said, it feels like I signed a contract with myself. When I wanted to close early, the note stared at me, and I felt guilty breaking my own word. After a month, his average R improved by 35%, not because his strategy changed, but because he finally let trades breathe. Here's the mindset shift. Closing early feels safe, but it's actually the most dangerous habit you have. Every time you take a quick profit, you're training your brain to crave short-term safety over long-term consistency. The market rewards patience, but patience feels unnatural, so you have to force it until it becomes your new instinct. The pain trap. Why you hold losers too long. If selling winners too early feels bad, holding losers too long feels even worse. Because you're not just losing money, you're fighting your brain's deepest survival instinct. Avoid pain at all costs. This is where loss aversion, another concept proven by Daniel Kahneman, comes in. Your brain feels the pain of losing twice as strongly as it feels the pleasure of winning. So when you see your trade bleeding to the ground, closing the trade isn't just a financial decision, it's an emotional wound. By keeping the trade open, your brain tricks you into believing the loss isn't real yet. It whispers, just hold on, it'll bounce back. Then you won't have to feel this pain. But this isn't logic, it's biology, and it's deadly. A Harvard behavioral finance study found that traders who delayed cutting losses consistently had 30 to 50% lower profitability than those who closed them quickly, regardless of strategy. The longer you hold, the more your brain starts rationalizing, it's only a paper loss. Maybe I'll even add to it. And before you know it, what should have been a controlled 1% risk turns into a catastrophic 5% or more. Ritual number 2, the pain reframe. Pro traders don't see closing a losing trade as failure, they see it as buying discipline. Every time you stop out, you're proving to yourself that you follow rules, and that confidence compounds over time. Start saying this out loud every time you cut a loss. I just paid for discipline, not for failure. It feels strange at first, but repetition rewires your brain to feel proud of cutting losers. One of my students told me, for the first time, I felt good closing a loss. I realized I wasn't losing. I was training myself to be a pro. Here's the mindset shift. Holding a loser feels safe because you're avoiding immediate pain, but the longer you hold, the more pain you're guaranteeing. The pros rip the bandage off fast, not because they're fearless, but because they understand that small, controlled pain today is the only way to avoid account-ending pain tomorrow. The endowment effect. Why you fall in love with trades. Ever notice how the moment you enter a trade, it suddenly feels special? You start convincing yourself this setup is different, that the market will eventually turn in your favor. You might even ignore new data that contradicts your bias. Why? Because of a powerful cognitive bias called the endowment effect. Once we own something, we overvalue it simply because it's ours. This bias isn't just for physical objects. Psychologists have proven that people assign higher value to things they own, even when there's no logical reason. In trading, this means that the second you hit buy or sell, you become emotionally attached to that trade. Your brain shifts from evaluating objectively to protecting what's yours. That's why you refuse to cut losers or why you keep checking a bad trade, praying it turns around. You're no longer managing a position. You're defending your ego. Ritual number 3, treat every trade like someone else's. Top traders break this bias by using what I call pretend amnesia. Before managing any trade, they ask themselves, if I hadn't entered this trade yet, would I take it now? If the answer is no, they exit immediately. One prop trader I worked with even takes this further. He writes a quick note every hour during active trades asking, would I enter this trade right now if I were flat? He said, the moment the answer is no, I'm out. No debate. Here's the mindset shift. You don't own your trades, the market does. The longer you treat them like yours, the more you protect your ego instead of your capital. Professionals detach. They don't care if it's their trade. They only care if it still fits the plan. The next time you find yourself defending a bad position, stop and ask, would I buy this trade from someone else at this exact price? If the answer makes you hesitate, you already know what to do. The tracker that shames your ego into discipline. Your ego is sneaky. It will justify every bad decision. Closing winners too early, holding losers too long, moving stop losses. By convincing you that you're being smart or adjusting to the market. But here's the thing. Your ego can lie to you in the moment, but it can't lie to you on paper. That's why the top 1% of traders track every emotional mistake they make. They know that numbers don't care about feelings, and seeing your own bad habits in writing is one of the fastest ways to kill them. Ritual number 4, the win-loss quality tracker. Create a separate column in your trading journal labeled emotional trades. Every time you close a winner early without a valid reason, hold a loser past your stop loss, move your stop, or take profit based on fear or greed, you log it. No excuses, no editing the truth. One trader I worked with hated this at first, but after 2 weeks, he messaged me saying, "It's embarrassing seeing how many times I break my own rules. I can't hide from it anymore." By the end of the month, he had cut his early exits by 60%. Not because his strategy improved, but because shame forced his ego to shut up. Why does this work? Because ego thrives in secrecy. When you keep your mistakes in your head, you can justify them. But when you see a growing list of stupid emotional trades staring back at you, your brain associates breaking rules with pain, and pain is a powerful teacher. Here's the mindset shift. Your ego doesn't care about your account. It only cares about being right. Your journal only cares about truth. And the truth, as painful as it feels, is the thing that will finally make you act like the disciplined trader you claim you want to be. The visualization hack that retrains your brain. Your brain doesn't just learn from real experiences, it learns from imagined ones. That's why elite athletes use visualization before big competitions. They mentally rehearse perfect performance until it feels automatic. And you can use the same technique to rewire your trading instincts. The problem with selling winners too early or holding losers too long is that these reactions feel natural. Your brain has been conditioned, through repetition, to crave quick profits and avoid immediate losses. But if you can rehearse the opposite behavior in your mind, you can train patience to feel natural instead. Ritual number 5, the perfect exit visualization. Spend 3 minutes every night or before your trading session, visualizing yourself managing trades perfectly. 1. Picture the setup. Imagine entering a textbook trade according to your plan. 2. Feel the urge. Picture the price moving in your favor and feel that familiar itch to close early. Then imagine yourself ignoring it, calmly waiting for your take profit to hit. 4. Visualize the discipline. See yourself hitting close on a loser exactly at your stop, feeling proud instead of angry. 5. Repeat the reward. Imagine the satisfaction of following your rules, not just making money. One trader I coached who did this daily told me it was weird at first, but after a week, I noticed I was calmer in live trades. It felt like I'd already practiced being patient 100 times before. Why does this work? Because your brain doesn't fully distinguish between imagined and real experiences. When you visualize patience, you're literally building new neural pathways, training your brain to see discipline as the default response instead of fear or greed. Here's the mindset shift. Your trading instincts are just habits your brain practiced too many times. Visualization is how you teach it new ones. Climax. Think about how much money you've lost. Not because your strategy was bad, but because you couldn't control yourself. How many times have you watched a winner run away without you because you closed too early? How many times have you sat frozen in a losing trade, praying it would turn around, only to watch your account bleed? Now here's the truth you need to face. The market isn't beating you. Your own brain is. Every early exit, every stubborn loser, every broken rule isn't bad luck. It's your biology doing exactly what it's designed to do. Your brain was built for survival, not for trading. It grabs quick wins because, in nature, taking small rewards meant safety. It holds losers because admitting failure feels like death to your ego. The market doesn't punish you because you're dumb. It punishes you because you're human. But here's the turning point. You're not stuck this way. The top 1% aren't superhuman. They just rewire their instincts. They train themselves to love patience more than pleasure, to respect small controlled losses more than they fear pain. And you can too, if you choose. The first time you force yourself to hold a winner to your planned target, it will feel wrong. Every fiber of your being will scream, "Take it now." The first time you cut a loser at your stop, you'll feel that rush of regret, that sting in your chest. But if you push through, if you repeat it enough, something amazing happens. Discipline stops feeling like pain and it starts feeling like power. Picture yourself 6 months from now. You enter a trade and you're calm. No panic when you're up, no begging when you're down. You let winners breathe, you cut losers fast, and you sleep at night knowing you followed your plan. That version of you isn't dreaming of being consistent. He is consistent. And it all starts with a choice. Every time you manage a trade, you're either feeding your old instincts or building new ones. One keeps you stuck in regret, the other turns you into a professional. Which one are you going to feed tomorrow? Let's bring this home, because if you actually apply what you've learned, it could change your entire trading future. Your strategy isn't the problem, your brain is. Selling winners early and holding losers too long isn't bad analysis. It's ancient survival wiring sabotaging you. The top 1% aren't smarter, they're just rewired. They've trained their brains to love patience and accept small losses as the price of long-term success. The rituals you build today are the key. Pre-committing to your exits, reframing losses, tracking emotional trades, and visualizing discipline will slowly transform how you trade. If you only take one thing from this video, let it be this. Every trade is training your brain. Every time you close a winner early or hold a loser too long, you're reinforcing bad instincts. But every time you stick to your plan, you're teaching yourself to think like a pro. That's how consistency is built, one disciplined decision at a time. So here's what I want you to do right now. 1. Comment below. What's the most painful trade you've ever mismanaged? One you closed too early or held too long? Writing it down will sting, but awareness is the first step to change. 2. Like this video if you're committing to 1 week of tracking your emotional trades. 3. Subscribe if you want more trading psychology breakdowns. Because this channel isn't just about charts, it's about fixing the trader behind the charts. And don't miss the next video, the FOMO cure, the journaling system that stopped me from chasing every move. If this video showed you why you sabotage trades, the next one will show you how to stop chasing setups that aren't even yours. I'll leave you with this. You're either training your brain to act like a gambler or like a professional. One builds regret. The other builds wealth. Which trader are you going to be starting today? As always, thanks for watching, and remember, discipline is your edge.